G'day and welcome to the Investor Motivation Podcast. Welcome, Amy.
Hello, Rob.
Now, I had a chat with Dallas Landwehr from BCH Accounts just a few moments ago, all about people going self-employed, going from being an employee to self-employed, all the things you've got to think about.
Nice, including like structures and the whole process.
Yeah, how to do invoices, how to price.
Wow.
All the things that probably is a roadblock, cash flow, how to set aside money for taxation. So lots of things to think about. And I suppose, encouraging people to get advice in this area, that what seems really difficult and hard, with good guidance from someone like Dallas from BCH, it's actually not that hard.
Yeah.
And if you're good at what you do,
I think that would be extremely valuable advice. Being a young person, I wouldn't know where to start with that at all.
It would all seem very daunting, too much to do, and when there's too much to do, end up doing nothing. So that's why we put this one together. But
just want to listen then.
Excellent. Amos, if you can do the acknowledgement of land, please.
Yeah. On behalf of the Investor Motivation Podcast, I would like to acknowledge the traditional owners of the land on which we do record this podcast and pay our respects to elders past, present and emerging.
Awesome. Thanks, Amy.
We'll get into it.
Yep. Let's have a listen to Dallas. Cheers. G'day and welcome, Dallas Landwehr from BCH Accountants. Thanks for coming in the office and having a chat.
Thanks, Rob. Nice to meet you.
Yeah.
Nice, sunny Friday afternoon.
Perfect. And we're doing this late on a Friday. We're probably not at our sharpest, but you have had a haircut, so yes. Very sharp. Now, full disclosure, Dallas has been my accountant for many years. The BCH has for many years. So there's a long established relationship. We get the two businesses get along very well because I think everything we do is ruled by common sense.
It is.
Yeah. And the one, I floated the idea of Dallas about having a conversation around people becoming self-employed. And for a lot of people, it's a huge roadblock to go from being employed and to go self-employed. What's some of the roadblocks that you see when you're chatting to your clients, Dallas?
I suppose it's the insecurity, like the risks that you're going to take, whereas as an employee, you turn up to work every week, you get paid no matter what, you don't have to chase anything, versus obviously being self-employed, there's a whole raft of, I suppose, worries that you've got. You firstly got to set what you're going to charge, you're going to do the work, then invoice for it, and then wait to be paid. So it's that cash flow worry, I think, for a lot of people, and that's a hesitancy to say, let's start.
Yes.
Knowing that, hey, I might get paid for a month for this job that I've done, versus as an employee, I get paid every week, fortnight.
Right. So setting up the processes to get paid quickly.
Yes.
In this day and age with, I know Xero's obviously a very good accounting software where you can have invoicing straight off the app.
Yep, straight from senders. The app sends it for you. So.
Right. So do your job, walk outside, jump on the iPad or the phone. There's no reason why that needs to be a headache.
No.
Yeah. So would you say, Dallas, would that mean that you don't have to have the part-time lady doing invoicing and paperwork?
100%. These days it is a lot of, I suppose, looking from a trading perspective, clients of mine in the recent years have gone out on their own, straight on Xero, find it really easy to do all the invoicing themselves and easy to chase up because the program does a lot of the work for you rather than days of I've got to get someone to come in on a Friday and write up my invoices, do them up, put in the post, and it's 10 days before the person even gets. Like that lag is a massive thing. And
it's a psychological thing too for the clients that if you always remember the invoices that are sent out 2 or 3 months after the job's done, you get the invoice and go, oh, well, they're clearly not in a hurry. I'll just put that over here. But when I pick up my car and if the invoice is sitting, either emailed same day or the invoice is sitting on the passenger seat, that's efficient. I know they're expecting their money.
Exactly.
So I think that's, so this day and age, it's just no excuses.
There isn't. You should be just do the work. Like anything, like any job or any service you do, you should be paid for what you do. It's good, as efficient as possible. So you've got to make sure that system works for you.
Right. What I mentioned, cash flow is going to be a big roadblock for a lot of people. So, how do we start and how do I get money in because I've got bills to pay and so on? Do you recommend a lot of your clients, say they're on a big, they've quoted on a larger job, asking for money up front to de-risk it? What's your thoughts there?
Yeah, 100%. I've got a couple of, I suppose, instances of, I won't name the field that we're in, but I just said, you're starting out in the industry which is busy, you've got plenty of work, it's a matter of a conversation with who you're working for. You're going to outlay a fair bit of money. If you're up front, like with anyone, and say, I'm new to this, I'll do your job, it's going to cost you $40,000, but I've got to outlay a lot of materials. I need the materials as an upfront payment.
Right.
So you're still paying, the client's still paying the exact same amount. They're just, rather than paying you $40,000 at the end, they might pay you $15,000 to start, and then $25,000. Like, just so that the client isn't, it's being smart with your business. And I suppose like these days, and even with terms of payment, I always say to clients, be upfront. Say, I'm starting out new, my terms are 7 days, it'd be great if you could pay in those 7 days. And I suppose, like anything, if you get a bit of a connection between you and the client, say, well, this person's, they're not doing it because they want my money as soon as possible. They are, but they're saying why, they're giving you some scope, some reasoning, some personality to that conversation.
And if there's a lot of materials involved, which is outlay for the tradesperson, that's where the risk is, isn't it?
That is.
It's often not debt that sends people broke, it's lack of cash flow, isn't it?
100%. And all it takes is that one client, if you've outlaid a heap of materials, haven't been paid a cent and they are really slow in paying, you've got to carry that. Versus if you're up front and say, well, okay, that's the quoted job is this, but there's a deposit I need for materials. Well, that takes a risk, and it's just your time.
Right.
So if you don't get paid, you can go and do something else, but you're not having to pay anyone else for your own time.
On a heap of materials that are in the person's job, and or he said, go away, don't want it anymore, and you can't return it.
Exactly.
So I suppose the entities that we would like to set up, again, I'm trying to think about those roadblocks right at the start. So what do I do? My first advice would be to go and see an accountant.
100%. Because obviously a lot of people think, I just get an ABN and that's what I need. The cheap option to do that, you go and do it. But sometimes from an asset protection point of view, or definitely from an asset protection point of view, that sole trader isn't the right structure. And looking for something where there is a company involved to give you some protection so that hypothetically the business is on the hook for any work that you do. But anything personal you own, because these day and age most people will have a mortgage, a house, and if you go on your own, regardless of whether you've got the right insurances in place, they're not always going to be 100% foolproof. You want to really, to get to 100%, very hard to get to exactly, but if you can get to 99.99% by speaking to an accountant to get the right structure in place. And obviously there's a variety of different structures, like the sole trader is just to get your own ABN, off you go. Sometimes as the generation used to be the mum and dad partnerships. I know my parents were a mum and dad partnership, still are. But at the same time there is risk with that, because even if Robin, I would say we're going to go into partnership together, we're both joint and separately liable. So if I do something wrong, you're on the hook for it.
Right.
Again, it's a cheaper option than going to the next stage where you're looking at a company or you're looking at a trust with the company involved. But it protects what you work hard for.
Absolutely.
And so the roadblock in that is the outlay of cost. Because you're looking at some money straight away to set these up, and a lot of people don't want to outlay because there's no return for that. Yes, okay, you get a tax deduction for it, but if I just go to sole trader, I don't spend any money. Easy.
But
later on, it's where the worry comes out.
And I suppose sole trader doesn't give someone the flexibility to divert income to their spouse, to their adult children. A partnership, if you've got a husband-wife partnership, you're like your mum and dad, is that automatically 50-50, or do some partnerships allow to distribute different amounts?
So generally, if you just want to go the cheaper option, you just go and get an ABN and TFM partnership, it's default 50-50.
Okay.
You can then go and spend, I think it's about $400 for a partnership agreement where you can specify how the income is distributed. There might be a 70-30, 80-20 percentage, or it can be one with what's called a salary clause in it. So hypothetically, mum and dad together, mum works somewhere else and earns a certain amount, dad does the physical work, mum does the bookkeeping. So it could be a 50-50 partnership, but there's a salary clause in there, so dad can get the first chunk of income for his physical effort, and the rest is split 50-50. But again, that's just helping you with income splitting. It doesn't help with the asset protection side of things.
So when you say asset protection, and it probably depends on the industry. If you're a doctor, you'd like to have the ultimate is where you're highly suable.
Yes.
We're talking family trust.
Yes, or a company, depending on, and it also depends on the industry. Sometimes doctors have to who you work for specifies that you need a company structure.
Yes.
But I suppose with any industry where there is any type of work that you're doing, not from say your safety of your own home on your own, there's risk.
Yep.
There's risk in what I do that I might have a computer cord hanging out and Rob comes as a client trips over and was that negligible? I'm like, where does the insurance stop?
Yep.
It doesn't cover you kind of thing. So that's probably a really far-ended, but it's as simple as on a building site.
I'm pretty clumsy.
You leave a tool somewhere. It doesn't take much for someone to fall over and damage they can do.
Yep.
And if the public liability, and insurance companies will try and find a fault not to pay out. And if they can get a crack in there and say, well, okay, no, Rob, you're getting sued, and Rob, you're quite a successful builder along the years, you've accumulated homes or whatever, but if you're a sole trader, those homes are there to be taken.
Right. And that's where potentially, as a sole trader, if people want to keep things completely simple, if they have their home, that should possibly be in the spouse's name.
Yes, but I suppose that's in a perfect world, if you're going to set up any structure to try and be 100% foolproof, is to have that corporate entity, so a company or a company trust in place, spouse owning the home is the best structure. But in saying if you've got that company and trust structure in place, the spouse owning their own home isn't as 100% perfect. Isn't what you need, but definitely if you can structure it that way.
Yep. Okay. So really to get the process going, go to an accountant. They need, say if it's a partnership or it's a company or a trust, whatever the entity is, you need an ABN.
Yep.
So that goes on your invoices.
Yes.
You need a new tax file number.
Yep, for the entity you're setting up.
Yep.
Then you're looking at, okay, I suppose that's the basics. You need registrations, I suppose.
Yep.
And public liability, I suppose, for any business is have something that's a non-negotiable.
Yes.
I know clients of mine who operate, I've got to do that. I'm like, no, you need to do that before you start, kind of thing.
Yep.
Go and get the cover note. You don't have to pay for it. Mm-hmm. Just go and see them, say, I want a cover note, and if things don't happen in a week, we can go and cancel it.
Yes.
Like you wouldn't go and buy a brand new car and just, won't worry about insurance. It's like anything. And then I suppose the next step is really the accounting side of things, like we touched on Xero, and by far Xero is what I recommend to get that tracking of your GST, what you're doing, but also for your invoicing, so that when we start work today, I do the first job, I can invoice it, not I've got to write it up, or I'll go and see my accountant once I've done so much work.
Yep.
Yeah, so it's being as efficient at the start with setting your own business up will help to make the business more successful.
Cool, right. And I think getting advice on these important things, because you'll do it in a way that your accountant, and my scenario of Dallas is getting a data feed, sees income. Because I remember when I first started in business 25 years ago, that and Dallas probably wasn't on the scene then, but 18 months ago by, and they'd say, "Oh, Rob, what was that transaction you did 18 months ago?" And I might have been young, but the memory still wasn't good and doesn't go back that far. By having the right links and the accountants in the loop, you're never behind.
No, you pick up on everything straight away.
Yeah, and it's noted, and you're never having to stress yourself in terms of, what did I do 12 months ago? Yeah. Now, since we're talking about invoicing, and obviously, going from employed to self-employed, I often see people where they were paid $35 per hour. Yeah. They knew they were being charged out at substantially higher rates than that. But I often see people, making their $30, $35 an hour, and they go self-employed and say, well, I'm going to double it. And also, I'm not sure what your thoughts are on this, but those same people, even in the agricultural mechanic game, are often charged out at 130, 140. And I always encourage my clients that you don't need to be, cheaper than your competition.
No, you just need to be around the mark at the start. And I suppose it's simple as what I say to clients is obviously at the start you want to get some business rolling in. Like you said, it's not to be cheap, but you might be $5 to $10 cheaper than what you know is around you start, just to get you rolling, to get some work going. But then once you've established a bit of a client base and you're working, it's then valuing yourself.
Yes.
That's what I call the clients, and it's working. So, well, if you want me to do work for you and it's Monday to Friday, 9 to 5, whatever hours you work, this is the rate.
Yes.
Then all of a sudden, if it's after hours or weekend work, which a lot of people don't, it's just my flat rate, that's what I charge. Well, the person's going to ring you on a Saturday and say they want it done.
Yep.
And so therefore you're working all the time and people get burnt out and struggle with that. You've got to be smart and say, well, I have a weekend and overtime, call out rate. Like anyone goes now, if you want something fixed and it's the call out rate, well, you've got to pay a premium to get it done today. Yep. So what you're trying to get the client busy between 8:30 and 5:30, and if there's extra work that's not working 50 hours a week over 7 days, where then you don't have a life, that balance that you would have had as an employee, because they don't want you working on a Saturday or working on a Sunday. They want you to work between that Monday to Friday.
And I've often, a lot of the conversations I've had around what they charge and also how they charge to, you don't necessarily need to disclose what you make per hour.
No.
And what I recommend for a lot of my clients is you don't necessarily have to put that on your invoice. X amount of hours at this, it just brings up questions, and people are so busy. People are screaming out for skilled people, that people want the people that they trust and have dealt with for years. You just need to be fair and reasonable.
And that's the thing, if you're quoting on it, well, that's great. You don't even quote what hours it's going to take. You just quote on the job, that's what it is. If the person accepts it, and the same thing. You'll have some clients who want the detailed bill of everything, but most people, if they think they've got a fair and reasonable job, they'll pay for it.
And if they trust you as the person doing the job, they're not going to question it.
No.
So I'm not sure what your thoughts are on this, but when I say to my clients, just have one line, parts, labour, and an amount, and it means it's quicker for invoicing. You're not having to type in, one spark plug or one V belt or
100%.
Just you're creating work for yourself and the potential to be questioned.
And not that you want to hide anything, it just you want to do it as quickly as possible. And not have to, why are you in charge this much per hour? So, well, that. And some people think, oh geez, that's too much per hour, he must be ripping me off kind of thing. But that might be the industry standard, but they don't know that.
Yes.
So
now, tax obligations for self-employed, the first year, the first 12 months, explain the process there.
So, as I say to a lot of clients, is that the first year is the best year as being self-employed because you pay no tax pretty much. Second year is the hardest because you're paying 2 years in one. So, what I say to clients, it also depends on what they're doing, but generally looking for a 25 to 35% of what you're earning. I encourage them either to open up an online saver of some sort, and that's where every time they get paid, that amount goes across. These days, a lot of people with offset accounts at their home line will move that money in there, knowing that you take that out of the account, that's not there to spend, that's to be put away. Obviously, when I say between 25 and 35, it depends. If you're purely just selling labour and there's no material or outgoing costs, well, then you're on the 35%.
Right.
Whereas if you're buying a lot of materials, which is GST, there's deduction in that, you don't need to pay tax on that part because it's just offsetting. So I say more of that 25%.
Okay. So put it aside, and that's because the tax office doesn't know what you're going to do. What you're going to earn.
And the clients that listen to me and actually do it end up doing their first year of tax, and I say, well, you're going to have to pay $10,000. Oh, that's great. I've got 14 sitting there already. Because it's very easy to realise you've saved an extra 4,000 and say, well, where am I going to find 4,000 for? And then if you haven't got a save, it's then coming out of the next year's.
And that once you've lodged that first year's tax return, the ATO say, right, you owe 10 grand for last year, where is it? And then you go on to a quarterly
ratio system, which is based on an increased fraction of that 10,000. So therefore, we'll say rough figures, if it's 10,000 in the first year, then you're going to pay 2,600 every quarter.
Right. So they'll increase that on you?
There's always an increase. Sometimes, last year was the first year that they didn't increase their, because obviously COVID years, but they still put an uplift factor depending on the industry.
Okay.
So therefore, that's where that second year you're paying the last year's and the next year's.
Yes.
All in one.
Yep. Now, it's probably worthwhile that we may not go in to have a discussion around employees and
that opens things up further.
Yeah, that's probably another whole discussions. What about, keeping records, if they ever get an audit where you have to go in for bat for your, to justify deductions and so on. Where does the technology kick in there? What should people keep? What's the process?
Well, generally most people are going to be called what's a small business entity, so you fall in that bracket where you could have kept things for 5 years. So 5 years from the lodgement of tax return, which realistically is about 5.5 that you need to keep invoices for. But these days with like Xero, technology has moved so far now that you can get a receipt, get your phone out, take a photo, capture it, upload it into your software and save it against the transaction. So technically you don't need to keep that invoice, it sits in the cloud. Okay, it's in the cloud, the risk of everything's in the cloud these days.
Yes.
Just like your bank, everything like that. So it's there and you don't need to hold on to it.
Fantastic.
I still say to a lot more people is just to box it up or put it there for every 5 years, and once you've dealt with it, you get rid of it.
Yeah.
But there is scope that you don't need to hold on to a paper trail.
Fantastic. All right, that's let tech be your friend. One issue we spoke about before we hit record was, excuse me, when people kick off being self-employed, and I reflect on when my dad was mentoring a newly self-employed guy, and he said, "Oh look, I was chatting to my mates. I need to get an overdraft," and Dad said, "Well, why do you need an overdraft?" I said, "Oh, they told me I need one." So overdraft is of course debt. He didn't need to buy anything, but that mentality to have debt. Because is the mentality around have debt because interest that I pay is deductible, and that's a good thing?
That's what people think.
Yeah.
But at the same time, especially the overdraft, you're looking at a high rate of interest, well above what you pay on your home loan. So, first of all, and then also at the same time, people see that. I've got an overdraft $50,000. If they don't need it, you'll generally see what happens, and that pays for the holiday, that pays for a new car, or whatever it is. Next, you know that overdraft's at $49,150 pretty quickly.
Yep.
And you haven't got anything to show. Like you've got some personal use assets, and you've got big interest. That interest could be anywhere between, at the moment, probably 9%.
And if it's turned into personal use stuff, you can't claim that.
Exactly, and therefore that interest is your credit cards. That if you don't use a credit card correctly, it's dangerous in that respect. So definitely don't need an overdraft. What I encourage clients to do, it's a 6 month before you think I'm going to be self-employed, is putting some money aside so that when you start up, you're going to have, I need $10,000 to get me through the first month. I've got that, so that waiting for that generation of income, you are okay.
Right. And what about when we see some guys, I'm self-employed, I now need the new Ford Ranger.
Yes.
And they go, the bank says, "Oh, we've got a wonderful product where you can lease or do a chattel mortgage." Again, more debt. And my accountant said that I'll save tax. Can you give your thoughts on that?
So firstly, the car, as much as the car salesman's a salesman, he's selling you a product. He gets paid by the products he sells. So the more he can make it look good to you, like, I can break it down, so it's only going to cost you $110 a week, so not much to cover this vehicle, but it's over a 5 or 7 year period. So it really cripples your cash flow from the day dot. As much as the deduction for the vehicle is going to be depreciable, it's only reducing the taxable income. You're still going to pay tax, but you're going to have this ongoing debt repayment. And if you can't afford it, or you're starting out, what I say is to live within your means in the first couple of years. You don't need the brand new vehicle. You can just do fine with a $15,000 to $20,000 vehicle.
It won't make you more profitable, but to be in the flash one that's debt laden.
And it's got to be practical as well. Like if you're a tradie and you buy the brand new Ranger,
don't
scratch it, and that's what happens. So not something that you need to go down that path.
And so chasing tax deductions, which I've seen a lot over the years. Can you explain, obviously, if you've got a $1 tax deduction, I think there's this thought that, I get a tax deduction and I'm beating the tax office. And it's so far from the truth.
It's the deduction thing, if I spend $100, it means I save $100 in tax. not the case. Hypothetically, say that you're a person earning $70,000 a year. If you go and, if I buy this $10,000 piece of equipment, I save $10,000. Well, actually, it'll reduce your income by $10,000. You might save 3.5, roughly, approximate figures.
Yep.
It's still costing you $6,500.
Right. So it's the way I frame it for clients is you spend $1 to save 35 cents.
Exactly. So you still lose 65 cents.
Yeah.
And if you don't need, if that different story, if that piece of equipment is generating income or something that you need that's going to save you money and make more, different story. But
yes,
if it's purely as I'll go and get that to your tax deduction.
Yeah, I did see a mate in a new ute, and I said, "Oh, mate, new ute." He goes, "Yeah, I feel a bit bad because my old ute wasn't quite 12 months old, but my accountant said I better upgrade to another new ute to save tax."
Yeah.
And I just, okay, no worries, and shake my head. I think that's just a really poor advice, poor understanding of the system.
Yes,
it doesn't work that way.
It doesn't work. And the thing is, you think, okay, if you didn't do that, you just kept the money, paid a little bit more tax, but you'd have more money to pay off debt, to invest, to do something else, which is going to generate, especially I suppose cars have been an age-old thing where they don't hold the value. Okay, obviously at the moment during COVID and lack of supply, it's probably been a little bit the other way, but that's not going to be forever.
That's not the norm.
No. So that's the thing. Why go and buy the $70,000? They're big money these days. It's not $50,000. No. It can be upwards.
Yeah. I think what I've always said, that whatever tax you think you're saving, depreciation in the vehicle going from 50 grand down to 35 or 30 in the first 2 or 3 years will smash anything that you think you've saved.
Yeah.
Excuse me. There's one issue regarding loans and self-employed guys getting loans for their home or renovations.
Yes.
And I'm seeing a lot of these guys having to be employed by someone just so they can get a loan. You've obviously seen a bit of that and worked with guys.
It's a lot of girls these days is the bank wants 12 months of figures now before you can get anything.
Right.
So a lot of people will go and get that part-time job. So they've got a pay slip to show which services are debt. Whereas if you're self-employed and you might be working for 6 months and being profitable, the bank will still not look at you for that 12-month period.
Right.
So something to bear in mind if you're going to make that move from being employee to self-employed is where's your life at as well. Like are you looking at buying a house? Well, if you're looking at buying a house 3 months after you've started, good luck these days, especially after post-Royal Commission. There's a little bit of tightening on lending criteria. And so they'll just come back to us in 9 months.
And I've heard of, when chatting to a guy at training last night, and he was saying he's been self-employed for 10 years, and they said no. And he had a track record, and it seemed far too conservative.
Yes, yeah, it's a tricky one, like, because obviously you're at the mercy of the bank at the moment to an extent, especially with interest rates. So you want to make sure you're doing everything you can to get that loan within means at the right time.
Yep. Superannuation. Unless you're employing yourself through a company that you own, there's no obligation to pay super, correct?
Correct. And that's probably another thing that people just forget about. They go self-employed, you'll pay super, and they just don't.
Right.
And 2-3 years down the track, nothing's happened. I suppose these insurances are within super, become null and void. But that gap can be like your long-term retirement savings is huge, and I generally will say to people, initially pay something, set up a monthly, whether it's a small, if you're working and you're earning, make it easy, $100,000 roughly, getting $10,000 of employee super. Okay, you worry about cash flow and that. And you say, well, why don't you go and set up $400 a month?
Yep.
Something like that. It's half of what you're doing, but it's still continuing. And then come June, we'll look to top it up in a once off.
Yes.
And then look to increase as you go along. So you're still making those super contributions.
Great. And if people are charging right from a per hour point of view, and 100 grand of profit turns into 150, you get a bit of a tax problem.
Yes.
That's where probably in May, June, or probably not June at all, but in May, go and visit your accountant, look at the numbers. It'll all be up to date if it's tracked through Xero.
Yes. And
you'll know potentially what the tax issue is.
So you look at that and say, well, here's a good point, put some extra top your super up.
Yep. And having money set aside for just in case within the business, does it sort of depend on the type of business, or is it always good to have 20, 30, 40 grand sitting there ready to go just in case?
Obviously, the more money you've got sitting in a safety position, depending on the business, the better.
Yep.
And that's where obviously with that 25 to 35 we talk about, the more of, so I say it's a minimum, some people have to put more away.
Yes.
Live off half of their income, and that way then if all of a sudden there's a bigger job and there's a time lag in getting paid, there's always a surplus amount of funds there to call upon.
Fantastic. Looking at expenses, and one thing I remember when I first started, I used to drive around, so I'm office based now, but I'd jump in the car and I'd go to the farm or the business and meet the client out and about. And I remember the logbook for the car. So do self-employed people still need to run logbooks and all the fun around that?
Yes, there's still a need for that, especially if you're driving a passenger vehicle. Obviously there's different rulings, and it's depending on the type of ute that you do drive.
Yep.
What sort of carrying capacity, passenger capacity on that as well, as whether it's exempt or not.
Right.
But it is generally a good thing if you can be bothered.
Yep.
Or not bothered, you should, for that 3-month period.
Okay. And more than likely there'd be a plug-in to Xero that would allow you to do that?
It's probably not one of the things that's adapted the logbook by time.
Right.
The easiest thing to do is the physical handwritten, because you've got to note down kilometres of when you start and finish.
Yep.
And that's where a lot of people just don't want to do it.
Okay.
And it's to their detriment kind of thing. Like if say you're doing 15,000 Ks a year for work, so using your vehicle a fair bit, if you don't want to do that, it could mean that you can only claim 5,000 Ks.
Right, okay.
So a missed opportunity just because you didn't do the 3-month logbook.
Fantastic. So Dallas, that's probably a fair bit of I wanted to get through. Did you have any other key points that you wanted to touch on before we wind up?
I just highlight obviously insurances, and that's where we at the same time talking to your financial planner around moving from being, and it's a tricky one, is the employee to self-employed and income protection insurance.
Yes.
Something definitely needs to be looked at, because when you're an employee, you've got sick leave,
Yes.
you've got work cover, you've got those other support networks there, whereas if all of a sudden you're a younger person, you play sport or whatever you do,
Yep.
if you get injured and can't go to work and you're break your wrist and you're a painter, what are you going to do?
Right. So where does work cover kick in? Is there...
So the only place as a self-employed person where you would be eligible for work cover is if you do have that company or company trust structure and you're physically paid a wage.
Right.
So if I'm Dallas Landwehr Proprietary Limited, Dallas Landwehr can work as an employee.
Then you've got a legal obligation.
Yes. Yep.
Okay.
Once you pay over 7,500 in wages to be registered for work cover.
Yep.
So therefore, technically, I, Dallas Landwehr, hurt myself at work, can then apply for work cover through Dallas Landwehr Proprietary Limited. So it does give you some cover at work, but it doesn't help you on the weekend. So
Right.
that income protection insurance becomes something really to look at.
Fantastic. Excellent. All right. Thank you, Dallas. Really appreciate your time and
Thank you.
great conversation. I learned a bit. Thank you for listening, and we'll catch you next time.
Thank you.